All right, let's get into it now with Chantal Marx. She's the head of equity research at F&B Wealth and Investments. Thanks very much for joining us today, Chantal. So what are the main drivers of markets today? I guess it's continually those trade tariff issues.
Yes, there does seem to be a slight optimism in the market, though. And I mean, if you listen to other analysts globally at the moment, a lot of guys are now a lot less negative than they were a month or so ago. Volatility has faded somewhat, and there does seem to be a sense of optimism that some of the trade issues that we're facing at the moment won't be as serious as what we thought about a month ago. We've also seen a really nice rebound in commodity prices. That has certainly helped the local resources sector. The gold price has remained well supported, and we've also seen platinum prices increase, and that's really helped our resources sector along. At the same time, you also have low inflation numbers coming through both locally and in the rest of the world, which could indicate that we could see lower interest rates, at least in the near term. And I think that that is also helping sentiment at the moment.
Yeah, I mean, you've sort of spoken to it already, because when you speak about global markets, to some extent, you're also speaking about our local market. Everything appears to be green here on our local market, with 96,000, sort of a whisker away, 96,000 index points, that is. Despite all the noise this year, it's really been quite a good year for investors on the local bourse.
Absolutely. I mean, if you look at the South African market, it has very comfortably outperformed the US market, for example, and is also tracking ahead of major European indices so far this year. I think what we need to keep in mind is the complicated composition of the JSE and the fact that we have quite a heavy weighting towards gold shares. So what this means is that when the gold price is high, these shares are well supported, and because they're a big weighting of the index, they prop up the index during periods of volatility and where you might see weakness weakness elsewhere. And then it's also important to consider that these are very high beta stocks relative to the gold price. So when the gold price increases by, let's say, 5 or 10%, these stocks will rally 20, 25%. So it really has had a very positive impact on our bourse, and just that diversified JSE really helping us out so far this year.
So I see that the RMBBR business confidence index was out. It was released for the second quarter, declining by 5 points for the second quarter to 40 index points. And this comes out, of course, just after we got that poor GDP reading yesterday for the first quarter of an uplift of 0.1%, hardly growth. What are your thoughts on the business environment and your expectations for the economy going forward?
Yes, we've had such an uncertain start to the year. I think when you looked back at kind of these PMI numbers or business confidence numbers a little bit earlier in the year, it looked like we were in for a much stronger year of growth. But the reality was that, as expressed in the GDP print, we've really struggled, particularly in the manufacturing sector and then in the mining sector to a certain extent as well. There's also been so much external uncertainty related to tariffs, and then you've also had kind of the chaos playing out between the GNU around the budget in particular, which I think gave businesses pause for thought. These things would have been kind of towards the back window when the survey was conducted. We would have had some relief in terms of the tariff 90-day extension. We also would have had the VAT increase off the table. But I don't think that if things are as rosy as they were prior to the Liberation Day story, and definitely not as rosy as they were at the start of the year. That is unfortunate, though. What I would also say is that you do get these soft data prints coming through from time to time. Survey timing does matter. And sometimes you get very divergent prints. I mean, we had a S&P PMI print earlier this day that showed that businesses were actually feeling a little bit better. So yeah, it's a complicated story, but it matches up with the stagnating economy, right? If there's lots of uncertainty out there, businesses don't invest, and you don't see that growth going forward.
Yeah. Let's take a look at one counter very quickly. Retail player SPAR, they came out with their half-year results for the 6 months ended the 28th of March 2025. They registered a decline in half-year earnings, with headline earnings per share down 0.4%, while group revenue was steady at 66.1 billion rand. What are your thoughts on how this counter fared? And of course, it's a consumer-facing counter.
Yeah, so the interesting thing about SPAR is they actually pre-guided for this outcome, but they did say that earnings were going to fall by between 0 and 10%. So this is way towards the upper end of that guided range, and it explains why we've seen such a positive share price reaction. They did give quite a detailed account of how this specific period under review has played out. And really, it's been a function of them having to fix their distribution situation. They had a serious disruption at their KwaZulu-Natal distribution operation because of a software implementation glitch there last year. So they've had to work through those issues. Things do seem to be moving in the right direction. I think what was quite encouraging was that we saw some good positive growth coming through from the hardware side of the business being built, and then also some solid growth coming through in their pharmacy business. But what it also tells you is that there is still quite a bit of strain. The company also made specific mention about lower sales to the middle and higher income groups, while the lower income groups have actually been quite resilient, at least within the SPAR stable. But I would be careful to take too much away from the SPAR experience specifically, because they have been losing market share gains. Or they have been losing market share rather, and I would want to actually see the likes of a ShopRite report as well before I can make any serious inference about what's been happening at the mid and higher end.
Yeah, fair enough. Chantal, thank you very much. Always a pleasure talking to you. That was Chantal Marx. She's the head of equity research at FNB Wealth and Investments. After a short break.